Hello and welcome to another Ethereum video. I wanted to take a moment and talk to you about the larger time frame for Ethereum, something that we do from time to time. Smaller time frame wise, we haven't really seen changes and we don't cover the larger time frame very often. So I thought I'll take the opportunity to talk to you about it specifically. What we're dealing with here on the long-term chart is a potential 5-wave move to the upside from the 2018 low. And what we're tracking is a wave 1, a wave 2. That was the wave 2 low in March 2020. Third wave rally might have topped in 2021. And the fourth wave might have indeed bottomed in 2022. And we could indeed now be in a fifth wave rally to the upside. This fifth wave rally should ideally take the price to, well, the area around $5,580 to $9,330. There are different ways how these targets can be calculated. So, for example, the way we've done it here, and I can just slightly adjust it actually, seems like more like 10,000. But that's really not much of a distance in the crypto world. So one way is we measure the length of waves 1 or the length of wave 1, and then we go to the low of the wave 2 with the Fibonacci extension tool and we get to this block. Sorry, I've just adjusted it slightly. It's around $5,930 to $10,100. But don't be so, we don't really need that level of precision on the larger time frame. It's more at the moment to get an idea of where things could be going, where the price could land. When we then get more price data, or as we get more price data and as we get closer to the price, well, then we can adjust those targets and we can add new layers of Fibonacci targets, which are then even more precise because we get more price data, we come closer to the price or to the targets, and we just get a better idea of how the microstructures have developed and so on. But yeah, this is one way of measuring targets. Another way is, and this points to round about $5,380 at the moment. It's to take the length of waves 1 to 3 together. So, considering that the 5,000, let's say the 5,400 level, and that is subject to change still, but considering that this level is an all-time high territory, it would be the first resistance level to watch. So basically, we'd like to see the price get above 5,000, we can say. Yeah. Obviously, the condition is that the April low is holding. Yeah, we want the price hold above the April swing low, which formed here on the 7th of April, because as long as we're holding above it, we can see the move to the upside as a fifth wave. The problem with this chart is it is an ending diagonal pattern, wave 1, wave 2, wave 3, wave 4, with the fifth wave potentially unfolding right now. So the subwaves are corrective. So the fifth wave would be an ABC structure most likely. Yeah. And it's a structure that cannot be trusted because ABC structures can morph and transform into other structures. But this would be the preferred scenario. It's very simple. We should get to $5,000 plus as long as we're holding above the $1,380 level, which is the April low. Very simple condition. Obviously, if you're following our videos about the microstructures, you have a better idea of other Fibonacci levels on the smaller time frames that need to hold to keep this uptrend alive. But this here is a high-level view. I just want to share with you the different scenarios we're tracking. The other scenario is the yellow scenario, which is a triangle pattern in which we're dealing with an A wave, a B wave, a C wave, a D wave, and an E wave. And this is a fourth wave sideways consolidation pattern. And from this fourth wave, or the end of the fourth wave, we can then get a fifth wave up, and Ethereum might even outperform Bitcoin in that phase because breakouts from triangles are typically quite volatile. Now, in reality, it will be difficult to distinguish this one from the white scenario anyway, because the D wave completes, we get an E wave and rally. In the fifth wave, in the white scenario, we're dealing with an ABC structure, so it will be difficult to distinguish. So we don't actually need to distinguish between the two too much. I just have it here to be able to show you all scenarios. And then lastly, we also have the, let's say, bearish scenario, In this scenario, it's the blue scenario. The bear market never ended, and we're dealing with a W, X, Y structure, and the Y wave is an A, B, C structure. Very, very complex consolidation pattern, in which case we're now in the B wave. And if the next move down is impulsive, this would be the scenario to go with. This is not preferred as long as we're holding the April low. It would need to prove itself. This is a scenario where we could easily get, target the $730 level. But as I said, this is not expected for now. But there will be signs, there will be warnings along the way that we will talk about in the videos. But for now, the price has performed a nice rally from the April low. The next deeper pullback should give us some clarity and could actually be a setup for higher prices. So could be an opportunity if we get a deeper pullback, but we're holding relevant micro support levels that we will talk about in the videos about the short-term chart. Again, those could be interesting opportunities. Just want to give you a broader outlook. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.